This company looks like a medical miracle, but we found a hole in their pocket the size of a crater. HeartFlow is scanning hearts with AI, growing faster than a viral TikTok, and sitting on a mountain of data. But is this a tech revolution or a financial ticking time bomb? Welcome to the HDIN Research Deep Dive. We're going past the PR hype to see if HeartFlow is actually the future of medicine or just a very expensive algorithm. Imagine going to a mechanic who tells you your engine might explode, but he needs to take the whole car apart just to check. That's cardiology today. We send 7 out of 10 people into invasive surgery only to find out, oops, they're actually fine. It's a massive waste of time, blood, and enough money to buy every person in New York a Tesla. This is the burning platform HeartFlow plans to extinguish. But here's the twist. The referees just changed the rules of the game. The major medical associations basically just said, stop guessing and start using AI. HeartFlow isn't just a cool option anymore. It's becoming the law of the land. They've built a clinical moat so wide that competitors are stuck swimming in the dark while HeartFlow holds the lighthouse. Let's talk about the "is this business making money" part. HeartFlow brought in $176 million last year. That's a 40% jump, but look at the leftover cash potential. Their efficiency is hitting 77%. That means for every dollar they earn, they're keeping a massive chunk because their AI doesn't need a coffee break or a salary. The machine is finally starting to pay for itself. Think of HeartFlow like Netflix, but for heart surgeons. Every time a doctor clicks that Analyze button, HeartFlow rings the register for nearly $900. It's a pay-per-click engine that's built directly into the hospital's daily routine. Once a hospital starts using it, they can't stop. It's the ultimate sticky business model. This is the smart money slide. Their sales grew 40%, but the cost of the sales team only went up by 20%. In consulting terms, that's operating leverage. In normal terms, it means the product is starting to sell itself. They've stopped buying their customers and started dominating the market. Right now, HeartFlow is an American hero. 92% of their cash comes from the States. But the rest of the world is starting to wake up. We're seeing a 23% growth internationally. And keep an eye on Asia, specifically the Greater China region. If they can flip the switch there, these revenue numbers are going to look like small change. Now for the bad news. Even though the AI is getting smarter, their cloud bill is getting scarier. Because they analyze so much data, they're basically paying a tax to Amazon Web Services that grows every time they win a new customer. To really get rich, HeartFlow needs to find a way to stop sending so much of their lunch money to big tech. Here's the danger. HeartFlow is currently a one-hit wonder. 98% of their money comes from just one type of scan. It's like being a restaurant that only sells one specific type of pasta. If people stop liking that pasta, or if the government says that pasta is too expensive, the restaurant closes. They must diversify, and they must do it fast. How do they stop people from stealing their ideas? Lawyers, lots of them. They have 617 patents that protect them until 2045. That's 2 decades where no one else can legally do what they do. It's not just a tech company. It's a legal fortress that's built to outlast your mortgage. But the real treasure isn't the patents, it's the data. They have 160 million images that have been hand-labeled by experts. You can't just go out and buy that. It's a virtuous cycle. More data makes the AI smarter, which brings more patients, which creates even more data. By the time a competitor starts, HeartFlow is already miles ahead. HeartFlow is swimming with sharks. On one side, you have the hardware giants like GE and Siemens who build the actual heart scanners. On the other, nimble AI startups are nipping at their heels. The biggest risk: the hardware guys might decide to build their own AI and lock HeartFlow out of the room. It's a classic game of frenemies. But HeartFlow has a second act. They're moving from just finding blockages to tracking plaque over a patient's entire life. This turns a one-time scan into a lifelong relationship. It's a multi-billion-dollar pivot that could finally make them a diversified tech giant instead of just a diagnostic tool. Time for a reality check. The Department of Justice is currently looking into HeartFlow's contracts. That's never a fun phone call. Plus, the government is looking to cut how much they pay for these scans by 15%. If HeartFlow can't win the legal and political battle, all that cool tech won't matter. This is the crater-sized hole we mentioned at the start. So what's the verdict? HeartFlow is a high-stakes bet. If they can beat the DOJ and make their new plaque tools a hit, they're the next MedTech superstar. But if the government cuts their pay and the hardware giants close the doors, it's going to be a rough ride. At HDIN Research, we're calling this a scale-up or shakeout moment. Keep your eyes on the data. Want the full page report with all the raw data? Reach out to our advisory team at HDIN Research. Whether you're an investor or a healthcare leader, you need to know where the money is moving. Don't forget to like and subscribe for more deep dives into the businesses changing our world. See you in the next one.